Precious metals market at the Vietnam IFC. Behind the scenes of the global economy, something of great impact is afoot. Vietnam has just taken another strategic step toward its financial future by proposing the creation of a precious metals market within its new international financial center, to be established in Ho Chi Minh City and Da Nang. But what does this mean in practice? In the next few minutes, you will understand how this move could strengthen the Vietnamese Dong, attract billions in foreign investment, and place the country in a privileged position among emerging economies. Vietnam's Ministry of Industry and Trade is drafting a decree that establishes clear rules. Precious metals trading platforms will require secure payment, custody, and asset transfer systems. Authorized banks will act as custodians, ensuring institutional security. Strict protocols against money laundering, smuggling, and fraud will be mandatory. And any transaction deemed unusual must be immediately reported to the authorities. This regulatory rigor shows that Vietnam wants not only to open a market, but also to consolidate international trust. This move connects to a broader strategy. The country is establishing 6 types of exchanges within its CFI, ranging from traditional commodities to carbon credits, including green finance, digital assets, and now precious metals. This diversified structure could attract global investors, increase the flow of foreign capital, and give Vietnam the chance to climb the international emerging market rankings, first by the FTSE Russell in September and possibly by the MSCI in 2026. But why is the precious metals market so symbolic? Let's compare it with examples you already know. In London, the LBMA sets global gold prices daily. In the United States, the COMEX influences gold and silver futures, even affecting the value of the dollar. In China, the Shanghai Gold Exchange strengthens the yuan and has already created its own benchmark price. In Singapore, the bullion market has given more credibility to the local dollar and strengthened the region's position. And in Dubai, the Gold and Commodities Exchange has become a gateway to the Middle East. Vietnam, by following models like Singapore and Dubai, demonstrates ambition to integrate itself into the global financial map with modern digital platforms, international custody rules, and a strong fight against illicit activities. Now let's get to the point that matters most: the impact on the local currency, the Vietnamese Dong. The inflow of foreign direct investment usually occurs in dollars, euros, or other major currencies. When this capital is converted to Dong, it increases liquidity and accelerates the velocity of money in the economy. If this is accompanied by sustainable economic growth, low inflation, and stable fiscal policy, the Dong can appreciate organically and achieve a role as a regional benchmark currency. However, there is an important caveat. If flows are purely speculative and short-term, they can generate volatility, not stability. Therefore, success will depend on a balance between strong regulation, price transparency, and attracting global institutional investors. And here's the reward for those who stayed until the end. If Vietnam can consolidate this precious metals market within the CFI, with international liquidity, clear pricing, and safe custody, the country could not only strengthen its currency but also position itself as a new financial hub in Asia, combining precious metals, green finance, and digital technology. A move that could transform the Vietnamese economy into a strategic trade and investment hub for the coming decades. If you want to continue following the behind the scenes of this global financial transformation and understand how it could impact the future of money, don't forget to subscribe to the channel and activate the bell. In the next videos, we will detail how Vietnam and other Asian countries are vying for space at the heart of the international financial system.